Hello traders, Mark P. Markets here. My name is Mark Principato and I'm a chartered market technician, and thank you for watching another exclusive gold analysis here for FXEmpire. So in this session, I want to talk about a recent trade idea that we shared in the gold CFD, which is XAU USD. And I also want to talk about some important lessons about the recent location and what we're anticipating over the next week or two in terms of where this thing should go. So with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, now onto the chart. So here's the thing. We sent out this idea yesterday evening when gold was pushing 1703 area, and this thing pulled back 10 points after the trade idea was activated. So there was a lot of time and a lot of opportunity to get into this thing at even better prices than the price that we put out. Now, if you're not in gold now, you can't chase this thing because these trades are all based on reward risk. And that's the first point that I want to make is, we had a trade idea, that we never sent out a few weeks earlier back here, okay, on May 24th on this pin bar. We saw it, we saw the setup, and we said, should we send this? And we chose not to. The reason, the risk was too high relative to the location and the size of that pin bar. Although it may have worked out, it didn't matter because we're not about chasing trades or taking trades that present a certain amount of risk. We have guidelines that we follow, and we also have to consider that we have other people that are following these as well. So we can't just take anything. We're very selective. So we let it go. Now, gold could have broken out at that point and we would have missed it, but no problem. There are other opportunities in other markets. But what did gold do? It pulled back and it gave us a new opportunity yesterday. Okay. And that's the thing. When something runs away from you, let it run, because if it's going to be a broad move, another opportunity will come along. And if not, there are other markets. But the point is, this inside bar gave us a much better reward risk in terms of the location, and we were willing to take that. So now we're in that trade, and as you can see, our targets are, we have one nearby at 1725 and the other two are much higher, with 1815 being our third target. Now keep in mind, if 1750 breaks on this leg higher, this thing has a lot of room to run. Now another point that I want to make out about something like gold is a very emotional market. You'll see a lot of hype and a lot of talk about this and that. Now fundamentally, which is something we don't consider when we take these trades, gold is very bullish. There's a lot of reasons in this economic environment for gold to be bullish. But like I said, that does not drive our decisions. Making decisions based on stuff like that can get you caught in situations like this. And that's a lot of pain you have to take, especially if you take a larger size position. Watching this thing go from 1750 to 1670 can be painful. So technicals are what give us the criteria to judge the reward risk, and when all of that lines up, then we can take a trade. Now, the other thing I want to point out is I had some questions about shorting gold, okay? And although on smaller time frames, it may say, oh, there's a lower high here and it's a double top and this and that and whatever, gold is going to go lower. When fundamentals are, that's where fundamentals play a role. If you're going against the broad fundamentals, you're asking for trouble, okay? Because as soon as a buy signal shows up, everyone's going to be piling in on top of that. If this thing breaks out above 1750, you better believe there's going to be more people with more confidence piling into this thing. And it can, testing the 1800s or higher is very reasonable over the next few weeks. Now, keep in mind, we have the FOMC rate decision tomorrow at 2 p.m. Eastern Daylight Time, and that can have a very dramatic effect on gold. It can push a lot higher very quickly. It can pull back just as quickly. We can't make any predictions based on that because the outcome is basically like random information coming to the market, especially if Chairman Powell throws some hints in there that the market did not expect. So just something to keep in mind. Do not chase. If you want to get into gold, wait for a better price or wait for a continuation pattern. Buying the middle of the range is a very high risk area to be putting on a position, even in the face of strong fundamentals. Okay, so again, thank you for listening. If you have any questions, please reach out and I will do my best to answer. My name is Mark Principato, Mark P Markets. Thank you for listening.